So far, it's all very good. In fact, it is far better than expected. It is surprisingly close to the pre-pandemic path, right? So if you assume that FY20 in real terms was 100, FY21 at 6.5% growth would have been 106.5, 22 would have been 113, 23 would have been 121. As per the nowcast based on mobility, we already seem to be at 115. So we are. So the first big threshold for most economies is how quickly can the economy recover its past level. The second threshold is, can we get back to the pre-pandemic trajectory? And on a run rate basis, at least based on the mobility data, we seem to be hitting that. And it is corroborated by the fact that the companies are also reporting very strong 2-year CAGR volume growth. And a lot of that momentum has actually continued into October. Talking to companies that deal with construction, it seems that a lot of the pent-up infrastructure capex that state governments had to do, you must have observed that there's some 4.5-5 trillion, there is 5 lakh crores of cash that governments have with the RBI. So that spending is also, there is some evidence of on the ground spending. So overall, the momentum looks very good. There is a but, and you may have anticipated that the but was coming. The rise in energy costs globally, right? So oil prices, gas prices, coal prices, edible oil prices. That is a $40-45 billion annualized headwind to the economy. Right, so you're suddenly paying that much more than you were 2-3 months back, and so the pace of incremental positive surprise should start to slow. And I think you're starting to see that in the market as well. October was the first month in 6 that the Indian equities significantly underperformed global equities.
And I'll get to each of those in a minute. So on the consumption demand side, is it still very much that, say, the top 10% of income earners is what is driving demand, or is it now starting to sort of filter through? I think you wrote in your article as to, that spending then further, leads to transfer in terms of income, earning ability of some of the lower income segments. Is that process sort of repair at least underway, if not complete?
Absolutely. I think that is very much underway. What is, before we get into the process, I think just some observation. A lot of the demand for the bottom 50% of the economy is non-discretionary, right? And so that doesn't change too much. The discretionary element of the bottom 50%'s consumption basket is a very small percentage of overall GDP. For sustainable GDP growth, it is not as important as the rich starting to spend, either in buying new houses or buying new cars if they're available, or just spending on travel and tourism. But the fact that now international travel is picking up, right? So 15 November onwards, I think they're free to arrive. A lot of these bilateral negotiations are clearing up. For international tourism, in gross terms, is 1% of GDP. Railways travel is picking up, so that automatically, if you visualize, means that the coolies have jobs, the small eateries that are outside every railway station for travelers, they start getting jobs. So that healing process is very much on. But in terms of incremental momentum to the economy, that's not more than 1-2%.
Okay. The energy hit that you're talking about, so there, of course, it's a global story. It's playing out here as well. To some extent, that hit got negated from these tax cuts. I mean, that passes from the consumption side to the other end.
Yes. So while we've all been celebrating the jump in tax collection for the government, and just to state that for your viewers, in the first half, the central government got 56% of full year budget as receipts. The 24-year average is 40%. There is a 16% of full year number, which is excess in the first half itself. So while that's an excellent indicator of an underlying economic strength, but it's also a drag, right? So this is fiscal tightening, And so that the government chose to push it more towards and just cushion some of the pressures because of the energy cost headwind. But that's only about half of it. So the cost in terms of excise duty reduction is about 1.1 trillion rupees. In our estimate, it's very hard to do that accurately, but basically the various states that have cut their VATs is about 0.4 trillion again. So that's 1.5 trillion. So about $20 billion. So half of the energy cost headwind has been sort of absorbed by this fiscal sort of rerouting. So you were collecting more taxes somewhere, you sort of pushed it here. But I think the bigger impact, and I know you are going to come to it in any macro discussion, inflation is very important, is that it starts to at least moderate some of the buildup of inflation expectations. You know that inflation expectations are not as well understood as some of us would like to pretend. So in some markets it could be the onion price, some market it could be the petrol price, some markets it could be something else. And the fact that almost everyone was starting to say महंगाई बढ़ गई है, that there is an inflation. So I think that was building up. The fact that the headline numbers are down by 10-15 rupees on the fuel pump should at least help to taper some of that expectation. That also, in my view, was perhaps a driver for the government's decision.